anticipate the market reaction to that looking like? Because we have seen Nvidia come out in the past and beat and raise, and the market has not necessarily rallied around that news because the anticipation is so baked in.
I would say with a pullback in the stock to around $100, I think a beat and a raise, assuming that it's pretty solid, should be adequate. If you think about Nvidia's valuation at these levels, we think they're going to do, over $5 and change next year. You're trading at 20 times, which is, puts Nvidia almost into kind of value stock range relative to the broader semiconductor market, which is kind of trading at kind of mid to high 20s right now.
So, John, there's lots to like, it sounds like, about NVIDIA. What would you tell investors is the most compelling second source play on AI?
We like monolithic power. They're a derivative play on NVIDIA. They supply power management solutions to the majority of NVIDIA's GPU solutions. In the next generation Blackwell, they're also going to gain significant amounts of content. Their ASPs are going to go up 40%. And then they're also gaining share at other providers. They're also now supplying power to AMD's GPUs. And later this year, we think they're also going to gain share on Google's TPUs.
What do you look at to indicate that thesis, John? Because, and I asked because I was going to ask you about your call on Micron. You did trim your price target, and you noted a couple of reasons why, particularly given the demand for the data center piece there. But what is the one thing that investors should take a look at when they are determining the long-term potential gains of an AI play?
Yeah, I would say kind of barriers to entry. I think when you think about NVIDIA, it's obviously got a significant advantage from a software moat perspective with CUDA, and also just their competitiveness. If you look at their next generation Blackwell solution, particularly GB200, this is not an incremental performance improvement that you typically get when a semiconductor company releases their next generation chip. This is a pretty transformational release where they're moving from a chip-based solution to a full stack server rack solutions where there's going to be potentially a 20 to 30x performance improvement. So I think that's kind of what you're going to be focusing on when you look at AI plays is, will they be able to continue to kind of push the envelope in terms of improving their performance leadership?
So then, John, where does that leave some of those other secondary plays when you take a look at AMD, some stocks that have been on a volatile run here over the last several months? Some of that negative moves that we had been seeing leading up to the last couple of weeks to the downside, was that a bit overdone? And do you see significant room to the upside?
I do. I think we still like AMD quite a bit. I think when NVIDIA first released their GB200 platform, I think there were some concerns out there of whether anyone else in the marketplace can compete and keep up with NVIDIA. I would say a couple of things, right? Obviously, the potential delay with Blackwell potentially gives AMD a little bit more breathing room. And in the history of technology, we have never seen somebody have a kind of a monopolistic position. It's just not sustainable. The market forces will not allow it. We think AMD has a competitive solution in MI300X. We think they're going to do $6 billion in revenues this year, which is obviously very small compared to what NVIDIA is going to do, but it's notable.
All right, John Vinh, great to get your insight here. Thanks so much for breaking down some of the recent moves that we've been seeing within the chip space. Equity research analyst at KeyBanc Capital Markets. Thanks so much.
Tuesday saw a nearly 6% increase in Nvidia shares after Goldman Sachs strategist Scott Rubner dubbed it the most significant stock of the year. Based on the chipmaker's earnings later in the month and the Federal Reserve's Jackson Hole Economic Symposium, Rubner projected a market rally. When Nvidia releases its earnings on August 28, the strategist anticipates a post-market move driven by the company's results, which may potentially signal the technical bottom for the largest index weights and AI darlings before a September surge. According to Rubner, there may be a short-term window of opportunity to purchase the dip as technical pressure eases, and the market may be ready for a Labor Day bounce. But before celebrating fresh highs in the fourth quarter, the strategist at Goldman Sachs cautioned that investors would encounter a tricky second half of September in front of the U.S. presidential election. Tuesday's 6.5% gain in Nvidia shares to $116.14 helped the company make up for recent losses. The stock's worth has more than doubled since the year's beginning thanks to Tuesday's advances. After a significant worldwide sell-off that rattled the markets last week due to concerns of a recession, investors are still wary. Tech values should be kept in check in the upcoming weeks by analyst cautions about the extremely high capital expenditures of tech businesses and the lack of sight over returns. In an interview with CNBC last month, Elevation Partners' Roger McNamee cited a Goldman Sachs analysis that suggested investors' expectations for returns on AI investments could not be met. Asa Ogoshi of JP Morgan Asset Management told Bloomberg that there will likely be an adjustment for tech stocks since she anticipates that the rise focused on AI will expand to other industries. When asked if she intended to cut back on her exposure to AI stocks in the near future, the analyst replied that she would be more selective in her AI bets and would raise the caliber of the stocks in the portfolio. Nvidia Corp is one of the tech stocks offering a compelling buy-the-dip opportunity, according to a recent report from BofA. Concerns over valuation are causing Nvidia Corp shares to drop. Morgan Stanley, however, added the stock back to its list of top choices. According to analyst Joseph Moore. So what does this really mean for Nvidia's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
And so I'm curious, something that you just mentioned a moment ago, and that was the fact that you're not too worried about the reports of Blackwell delays. I guess I'm curious as to why. Why is it that you see that as a limited setback at this point?
So yeah, just to put a bit of context, the Blackwell is a chip that's designed with CoWoS-L. It's a packaging technology by TSMC that is being used in Blackwell. That's different from what was used in Hopper, where it was CoWoS-S. And so that involves like high density local silicon interconnects and redistribution layers to improve the die-to-die interconnect density so that the two dies can speak to each other very, very quickly, very, very fast. And so the integration of these components into the substrate has resulted in issues like thermal mismatch and warpage. But reality is that Blackwell is a cutting-edge chip. It's pushing the boundaries of packaging, and it was brought to market very, very rapidly by Nvidia. Nvidia is accelerating its product cadence. So inherently, there were risks of delay. But that being said, we still expect, Nvidia and TSMC to bring Blackwell to market with acceptable yield and volume in 2025. And in the near term, Nvidia can mitigate the situation in many ways. They can extend the life of Hopper. They can release a single die Blackwell chip. And so, yes, maybe the shipments will be more weighted towards Hopper in the second half of 2024 and early 2025. But we still sense enormous and urgent demand across the board, and that mitigates the risk of a pause in shipments as customers wait for the next generation of chips to be available in volume.
On the other hand, others are worried about Nvidia's future growth trajectory in light of the most recent major tech earnings. Alphabet and Meta Platforms, two of the company's biggest clients, have hinted that they might be overspending and overbuilding AI processors. Based on data from 2023, Nvidia Corp is selling roughly 2 million of its GPUs annually. The company won't be able to maintain its current growth trajectory as competitors increase their supply and demand moderates. Based on a moving average convergence/divergence indicator, Raymond James analyst Jav Mirza recently stated in a report that NVDA has triggered a mechanical sell signal. He said in a technical analysis report that the stock is showing early indications of selling pressure and is trading below its 50-day moving average. This indicates that a correction period lasting 1 to 3 months is imminent, according to Mirza. He went on to say that a sustained break below the 50-day moving average may cause prices to fall to 94.94 or 16.9% below current levels. In its Key to Investor letter, Patient Capital Opportunity Equity Strategy made the following statements about Nvidia. Nvidia remained a top performer during the period, gaining 36.7%, and led both the market and the portfolio. Leading the industry in both GPU design and sales, Nvidia has recently profited from the unquenchable need for artificial intelligence, AI, models. With a 92% market share in data center GPUs, the firm has had remarkable growth in revenue, profitability, and free cash flow, or FCF, over the past year, with increases of 126%, 392%, and 610%, respectively. Even though we anticipate more competition, we believe NVDA can hold onto its leading market share. Although many are worried about the reduction in backlog times, we believe that additional shortages will arise later this year with the introduction of the B100, which offers 2.5x better performance for only 25% more money. Being well-positioned for the growing adoption of artificial intelligence, AI, is the company's cutting-edge technology, growing innovation cycle, and robust Monkey's article titled 11 Trending AI Stocks on Latest News and Analyst Ratings. Nvidia is ranked number 1 overall. Although we are aware of Nvidia's potential, we are more certain that AI equities have a better chance of yielding larger returns in a shorter amount of time. Despite U.S. sanctions, Huawei Technologies is getting close to releasing the Ascend 910C, a new AI chip that will compete with Nvidia, the Wall Street Journal said on Tuesday. According to the journal, which cited persons with knowledge of the situation, Chinese IT companies have been testing the chip, which Huawei is alleged to have disclosed to prospective customers rivals Nvidia's H100, a chip that is not readily available in China. Huawei's advancements highlight the company's capacity to get above obstacles set by the United States, supported by significant state assistance. But according to the WSJ, there could be a restriction on access to essential parts for AI gear due to production delays and possible new restrictions from the U.S. As you can see, Nvidia is making waves in the tech world, and analysts are confident that now is the time to invest. Whether you're looking to diversify your portfolio or capitalize on a growth opportunity, Nvidia could be the stock that takes your investments to the next level. If you found this analysis helpful, don't forget to like, share, and subscribe to our channel, Investing Tutorial, for more expert insights and tips to help you navigate the world of investing. Stay tuned for more content that can help you make smarter financial decisions.